Welcome back to Grown Quality. My name is Elian and I look for stocks which are increasing their moats. Now it's Friday, which means that we will look at my YouTube portfolio to see how that's getting along. And we will take a look at Apple because it is facing new troubles. Now I will experiment a bit with just recording my screen and being on screen myself as well. So please bear with me as this is an experiment. I'm gonna see how it goes and try to see if this is an improvement for the coming videos. So let's dive into my portfolio. Because as we can see, the portfolio has had some returns over the past week. Now, this is of course me putting money in there. But as we can see, the returns went from minus 2% to positive about 2.5%. This is good, and I think this is mainly because of, well, Enphase and PayPal. So Enphase stock is up 4.5% over the past week. This is because the Fed came out a little more dovish than expected. And this, of course, was a good thing for stocks which are very interest rate sensitive, such as Enphase. Now, there wasn't much news apart from an insider selling some shares. Now, this happens all the time and it doesn't really have to be anything significant. So, next up, we have Ferrari. Now, Ferrari is also up 2.5% over the past week. Ferrari is getting sued over an alleged failure to fix brake system issues. Now, if we look at the lawsuit, we can see that it's a class action lawsuit initiated by California customers for allegedly failing to address a life-threatening brake defect in some of its luxury sports cars. The plaintiff used a 2010 Ferrari 458 Italia, and in the beginning years, these cars were, of course, a bit problematic. Some of them caught fire as they also used glue, which could not handle heat issues. Of course, getting sued for such a thing is not ideal, but I don't think all too much of it. Maybe Ferrari will be forced to fix the issues. So let's move along to Monday. Monday is up about 5% for the week. Another great deal has happened with the company. The stock is quite volatile, and this is because it still has a very small market cap of around 10 billion. So then let's move on to Moody's. Moody's is, of course, a smaller position of mine, and you can basically see it as a combination between Moody's and S&P Global because these are two very stable companies. They have extremely wide moats, and they are a bit of the stable factors in this portfolio together with Ferrari. Then we go to PayPal, and PayPal is up quite a bit. Now, PayPal is also up 5%, but it's up around 15% in the past 2 weeks. Now, why is that? Well, PayPal has just been going through a lot of changes. On Wednesday, I released a video highlighting everything of this. And now there's another news article coming out saying PayPal product reforms hold upside potential at current valuation. PayPal Holdings' potential for modest upside from new initiatives and conservative fiscal 2024 guidance suggests a favorable risk to reward scenario for the company at current valuation levels. Now, this is also exactly what I went into on my video on Wednesday, because I think the company is doing a lot of small changes, which may not be very effective and influential if you look at them separately. But as they try to stack a bunch on top of one another, it sort of becomes a big package in itself. Now, this is also kind of my bull thesis for PayPal, and the company is trading at a 12 forward PE. So, what RBC Capital is saying here, I fully agree with. The only thing from RBC Capital I don't really agree with is that they have a price target of $74, and having an upside of about 15% is not something I see as very likely, as I also believe the company is becoming more predictable again. Now, again, on Wednesday, I released a video going in depth on PayPal, and if you are interested in it, you can check that one out yourself as well. Now, after PayPal comes Rivian. Now, Rivian is up about 4.5% for the week, as Rivian gained access to the Tesla supercharger networks. Now, of course, Tesla uses different plugs for their chargers than Rivian does, so Rivian will be sending out adapters to all Rivian owners in April. Now, I think this is a very good thing that Rivian gained access to the supercharger network of Tesla, And this is for both companies kind of a win-win because Tesla, of course, gets more revenues from all the people charging at their stations. But Rivian also improved their charging network with people with range anxiety. This is something very positive, of course. Now, then we have S&P Global, and S&P Global is mostly flat on the week. They are up about 1.2%. This is something that's, well, they don't really have anything special going on there. The company is just struggling along quite nicely. And like I said at the point of Moody's, you can see this as a combined position together. So I just switched myself to the other side of the screen to get into some of the holy sins of investing, and that is looking at charts. Now, I do this because charts are representative of sentiment and they do have something to tell you. And they are mostly a guide to see how things are doing. Now, if you look at my chart, you can see a few things. First off is this purple line. This is the 200-day simple moving average. We have the blue line. This is the 50-day exponential moving average. And the other purple line is the 21-day moving average. These are just simple trend lines. This is not because I try to do a trend following system. This is just to see what others are seeing. Maybe you can alter decisions based on them. They are a factor, not a main driver. Because if we look at N phase, for example, in this area, where you can see that it struggled to stay above the 200-day simple moving average. Now, the chart of N phase doesn't really show us much. Now, when we look at Ferrari's chart, for example, you can see that it's quite a bit extended. At this moment, I'm not buying Ferrari very heavily, but although Ferrari is an expensive stock, they always have been, as the company is of very high quality and has a lot of pricing power, because Ferrari is an actual luxury play, which means that if Ferrari is increasing prices, the product just becomes more desirable. Of course, there are limits to how expensive a stock can become, so I'm keeping it at small nibbles, and if the opportunity comes, I'm gonna go more heavily into Ferrari. Now, onto Monday, the stock is flattening out a bit. It has used the 50-day exponential moving average as support quite a lot, and this may tell you that this could be a good point to buy. Now, of course, we're now somewhat above it, so also for Monday, I'm not buying it very heavily right now. Now, Moody's, you can see the sell-off that happened after earnings, but Moody's, being the high-quality company that it is, investors saw this as an opportunity and immediately started buying the company back up. Now, as for PayPal, the stock is actually coming quite close to the 50-day exponential moving average, crossing back over the 200-day simple moving average. Now, this is a momentum guide with the 50-day moving average below the 200-day moving average being negative. And when it's the other way around, that's positive. PayPal itching towards switching that back around, or the golden cross as it's called, is something that could be very positive for PayPal's recovery, as it's been trending down now for about 2.5 years. Now, like I already said, PayPal is implementing a lot of changes, and I think these changes will start showing into the stock price with cautiously creeping back up. Now, Rivian's stock is just down. There's not much more to say, and my thesis with Rivian is that I'm trying to position myself for when the stock gets back up. Now, with S&P Global, there's not much going on. You can see that it's struggling a bit with the 50-day exponential moving average, but we will see what happens. I think it may have some downside to the 200-day simple moving average, but that's about it. If it will get down to there, I will start buying it more aggressively, because historically that's been quite a good place to add to a position, as it has acted as support area quite well. Okay then, so for the news of this week, because the DOJ is suing Apple. Now, I have just taken myself out of the frame here in order to show the news article a bit better and not be in the way. But news broke yesterday that the DOJ is suing Apple over the App Store, along with other anti-competitive practices. Now, this is something that was expected to happen and is not coming as a surprise. But where did this actually start? Now, Apple has been going through a debacle with Epic Games, where the maker of Fortnite sued Apple over the practices of the App Store. This happened as Epic Games tried to go around the 30% Apple tax the App Store has by pointing users of the game toward other payment options back in 2020. Now, as a reaction to this, Apple blocked the app from the App Store as they claimed Epic Games had breached the agreement it had with Apple. This resulted in Epic Games suing Apple and Apple filing a counter lawsuit. Apple won 9 out of the 10 points of the lawsuit, but the point Apple lost resulted in app makers, such as Epic Games, to be allowed to notify users of other payment options. This leads to the next problem Apple is facing regarding the App Store, because the EU imposed a massive $2 billion fine over abusing its dominant position and breaking EU antitrust laws. This came following complaints from Spotify over the same 30% Apple Store tax. And by Spotify complaining, I don't mean they just complained. I mean that they met with EU regulators over 65 times to express the unfairness of Apple's App Store policies. Now, this leads to the latest troubles Apple is facing. The American Justice Department, or DOJ, is opening a lawsuit against Apple. The DOJ is arguing that Apple has a monopoly over the phone market, going as far as saying that the blue bubbles Apple uses in messages is contributing to the monopoly. They say this is done to keep people in the ecosystem. Another point the DOJ goes after is the fact that Apple products are just a bit better integrated than third-party apps. The watches, for example, when you buy an Apple Watch, it connects better to your iPhone than when you use a third-party smartwatch. Now, the lawsuit also argues that Apple increases the moat around the business, not by making products more attractive to users, but by discouraging innovation that threatens Apple's smartphone monopoly. So, why do I think this is interesting? Well, the name of my channel is Growing Quality. And like I say, I try to look for stocks which are increasing their moats. And this is not it. This is actually everything but it. It looks as if Apple has overdone it and everybody is trying to go after the company and testing how deep the moat actually is and trying to compromise it. This might even become a bigger problem if Apple goes through with the Gemini partnership, further strengthening Google's partnership, which is under scrutiny as well for anti-competitive practices. As you know, Google is the standard search engine on Apple's Safari browser, and they pay a lot of money to be so. This deal is also being challenged as anti-competitive. Now, all of this is not a good thing for Apple stock as it's increasing negative sentiment. After not growing Q4 earnings for the past 2 years, the Google antitrust lawsuit, EU antitrust fines, Buffett selling a tiny fraction of his stake, and now another antitrust lawsuit. It is no surprise that the stock is coming down from its all-time highs, and time will tell where it will bottom out. I'm happy to not have a position in this company, although I might consider it if the stock falls far enough to become an interesting deal, because Apple still has massive free cash flows, they still buy back a massive amount of stock, and this means the stock will always be interesting, but just for the right price.